Welcome to Money Talks. I'm Cathy Yang, your intel on the Philippine markets and the economy. In the headlines, business and employer groups call on the government to consider removing or suspending value-added tax on fuels, electricity, and basic commodities. Because of higher prices and a weaker peso, the Bangko Sentral ng Pilipinas sees inflation surging 5.6 to 6.4% in April. And even in this volatile environment, technology and AI are reshaping the way Filipinos work and look for work. A conversation on this Labor Day holiday with Job Street by Seek Managing Director Dana Maharopon. The country's largest business and labor groups urge government to roll out relief measures, including the suspension or removal of value-added tax or VAT on essential goods. In a joint statement, the Leaders Forum said this would help ease the impact of rising inflation on households and businesses. The group is made up of the Employers Confederation of the Philippines, the Philippine Chamber of Commerce and Industry, and several major labor federations. They are pushing for a targeted review and possible suspension of VAT on fuel, electricity, and basic commodities, with strict monitoring to ensure price reductions actually reach consumers. That's as the VAT continues to drive up costs and hurt affordability, business viability, and overall economic activity. The group also called on lawmakers to raise the tax-exempt income threshold, expand support for vulnerable sectors, and roll out time-bound fiscal measures. President Bongbong Marcos earlier said he is not in favor of removing VAT on petroleum products, citing its role in funding social subsidies. Instead, he signed Executive Order 114, suspending excise taxes on liquefied petroleum gas, or LPG, and kerosene after global oil prices crossed the legal threshold. The Philippine peso recovers Thursday after hitting two record lows just this week. The central bank is already gearing up for the domino effect from the weak currency, projecting higher inflation in April. News 5's Gerard de la Peña has this report.
Thursday's exchange rate, the last for the week before the Labor Day holiday, closed at 61 pesos and 48 centavos to the dollar. Though still dismal, the local currency's performance is already an improvement compared to the previous days. For a second time in just 1 week, the Philippine peso plunged to historic lows, even breaching the 61 peso mark. The figures at first glance looks beneficial for overseas Filipino workers and their families. Remittances from abroad will surely grow in value with a stronger dollar. But from one OFW's point of view,
kahit naman lumaki yung dollar, tumaas din naman yung mga bilihin natin eh. Kaya wala rin, parang ganun pa rin.
The Bangko Sentral ng Pilipinas estimates that inflation could come in higher for the month of April, possibly reaching 5.6 to 6.4% this month compared to 4.1% in March. If this comes to pass, this will be the highest inflation rate since 2023, a far cry from the 1.4% posted in April last year. Now, analysts and economists are predicting that the BSP will inevitably hike interest rates, which would have a domino effect, steeper lending rates, and slower business spending. But the central bank's intervention will definitely slow down inflation and hopefully give the much-needed boost to a weakened local unit. At the very least, peso-based investments would earn more. But all these are not necessarily good news yet for the economy.
For as long as you have that blockade of the Strait of Hormuz, and US President Trump appears to be not willing to lift the blockade anytime soon, and therefore that is also exerting upward pressure on global oil prices and also depreciation pressure on several emerging market currencies, including the peso.
For News 5, Gerard de la Peña, we are One News.
The Philippines' April jobless numbers are out next Wednesday, May 6. It will be the first indication of how jobs here had been impacted by the Middle East crisis since it began over 2 months ago. For her insights, with us for more is Job Street by Seek Managing Director Dana Maharopon. It's good seeing you, Dana. Welcome to the program.
Good to see you too, Cathy. Thank you so much for having us here.
All right, so how do you think that will turn out when the jobless numbers are out on May 6th? Because we have a fair bit of overseas Filipino workers have been repatriated back home for safety because of the Middle East conflict.
Yeah. While it is unfortunate that we do have our overseas Filipino workers losing their jobs in the Middle East, what we do see is that the overall job market and the overall jobs available here in the Philippines continues to grow. That means that there are reintegration opportunities for them, especially for those that are in the high-skilled sector.
All right, the opportunity is there, but at the same time, we're seeing that spike. If we just take a look at the chart, in the last joblessness report, we've seen a spike in the unemployment numbers. Perhaps seasonality at the start of the year, but that's the highest that we've ever had it since June 2022. How might that look like when the numbers are out? Because you also have to consider the underemployment numbers,
That's correct.
which have really stayed high at double digits.
Well, our labor workforce continues to grow as well. So the January spike in unemployment does have to do a lot with seasonality. We see seasonal jobs spiking towards Q4 of the calendar year and takes a slight dip come the start of the following calendar year. On underemployment, however, we do see this as a continuing challenge for the Philippines because the skills gap for Filipinos still remains to be the biggest and even a bigger challenge than unemployment is. What this means is that the available talent and the level of skills and qualifications that we have may not necessarily always match the available jobs that are there in the market. Now, what this means for Filipinos is that it is a strong call to upskill and reskill in order to keep up with the ever-evolving needs and demands that businesses have, especially in a very digital world. One example of that is AI literacy. We see that 36% of companies do require and do have as a baseline expectations a level of AI literacy from their incoming employees, regardless of their role, because about 40% of companies now embed AI tools in how they run their businesses. All companies are moving towards efficiency, are moving towards ensuring that the repetitive and administrative tasks are augmented by technology, such that the human value add is on critical thinking, is on analysis. And that's where Filipino talent can truly shine, provided that we continue to upskill.
Provided. That is the huge condition there. And that's what we're seeing in the in-demand jobs. At the start of this year, you said that it would be in admin, engineering, education, and ICT.
Yeah.
Those are the in-demand jobs. But I'm wondering now, if we layer over the Middle East crisis, what's actually happening to those jobs? Are those gone?
Well, the top
because
three that
of-
you've mentioned
of what's happened?
were... Oh, sorry, please go ahead.
Yes, because it's seeing pressure perhaps because of the Middle East conflict, or are you just seeing a rotation, a reshuffling of the kinds of jobs on that list?
Yes, so what we see is, number one, the overall job availability in the market continues to grow. We are also seeing particular sectors that are growing faster than most. For instance, call center, accountancy, as well as ICT are in our top three as of the first quarter of this year. It's not necessarily because everything else shrunk, it's because the demand for those, especially on niche roles surrounding those industries, continue to go up faster.
Could that be a function of the Middle East crisis, the repatriated OFWs who are presumably more skilled getting into those jobs? What are you seeing?
Well,
is
we
happening?
see that the growth in those particular roles are influenced both by global movements as well as growing local demand. We see that more and more international companies are offshoring a lot of their back office, high-skilled work here in the Philippines. We're seeing growth in the BPO sector. We see that in the publications that the BPO sector also has released earlier in this year, where more niche roles, especially in the accountancy space, even in the healthcare space, continues to grow for them. So it's what we see are two things. The opportunities are growing, and as our repatriated Filipinos come back home, what this means is that there are opportunities for them to continue earning and continue their career here in their home country.
So this is what we're now seeing, a reshuffling because of the Middle East conflict. But Now, given what we're seeing, do you think AI is creating more jobs than it is destroying? What's the situation here in the Philippines?
Well, we do see that jobs are not necessarily getting replaced fully by AI, but rather jobs are getting augmented by AI. What this means is that what was generally a very administrative role now has a blend of AI augmenting the base administrative tasks and expanding that role into something that involves more analysis and more critical thinking. For example, a traditional sales role, which would typically have in its scope meeting clients and providing support for their clients, now has AI supporting the creation of such reports, has the presentations supported by AI, so that their time and their focus is really given more to the customer to understand what their evolving needs are as well.
But it also depends on the willingness of the person that's under threat
Oh,
because
definitely.
of AI. What are you seeing in the behavior of our labor market? Is it a demographic issue that you're seeing, or is it across the board?
Well, on one side, we see that companies are continuing to adapt into AI. What this means is that inevitably, companies are also upskilling their people. On the other hand, we do have companies that are falling a bit behind, and so the call to its own employees is to get ahead of the curve and try to upskill themselves. The beauty of it is that access to upskilling and reskilling opportunities are vastly available in the market. For instance, in JobStreet by Seek, we do have modules and e-learning with certifications that allow for all of those upskilling activities, all for free, in order for them to be able to bring those to their companies and aid them in their AI transformation as well.
If we just pick one demographic, the Gen Zs.
Yes.
We've always thought that it was just a paycheck that they were interested in, but it's not. They have other considerations in choosing the job to work in and stay on.
Definitely.
Is that changing? And if so, what is that major metric that makes them stay?
Well, Gen Zs have always valued purpose, have always valued, things like ESG initiatives that companies have. For them, it's beyond the job that they need to do, but rather the impact that it has. If that aligns with them, coupled with, of course, their non-negotiable need of work-life balance, then they get to stay in companies. We always we give this as advice to our clients, where we say that Gen Zs bring with them the deep digital literacy that all other generations are just learning now. So them learning AI, they already come with it. So the investment around how do we build out their soft skills, how do we build out their communication, their agility, their adaptability further is something that is a worthwhile investment. Also because they are now growing to be the largest generation in the workforce.
All right, so when we look at your online search, what is the most searched job that you're seeing in, say, the last 1 or 2 months?
Well, it's not so much a particular job, it's work arrangements. So we still do see work from home and hybrid work as the top searched on our platform. We do, of course, continue to see call center roles being one of the top most searched. We see IT roles also being the most top searched, but predominantly is focused on work arrangements.
All right, so there's that openness amongst the digital natives, but what about those who are more senior in the market? What can they learn about this evolving market and how they can future-proof themselves, knowing that AI is there to augment only if you're willing to get upskilled?
Well, we believe that learning never ends, regardless of what level you are in an organization or what role you are fulfilling. So foundationally, learning AI is essential. Moving that baseline AI knowledge into expertise is really what will set talent apart. So regardless if you are starting out or you are in the most senior role, AI is here to stay. The question, as we mentioned earlier, is are you willing to adapt or be left behind?
Okay, given that existential question, how soon do you think that underemployment double-digit level would come down? given the changes we're seeing and how things are evolving on the job market?
Well, we do see that both employees as well as institutions are investing in upskilling for Filipinos. So we see that, the likes of TESDA is also digitizing access points to upskilling and reskilling modules. We see companies like JobStreet by Seek also doing that, companies also doing that. So the aspiration there is that we create more high-skilled talent that's more adaptable to the evolving changes that we see throughout the workforce, and that double digit steadily declines. But there really needs to be foundational institutional changes around how we teach and how we adapt learning for Filipinos. It is possible to upskill. The hope here is that the incoming workforce are more prepared for all of these changes.
All right, let's hold on to that aspiration. Thank you
Thank
so
you.
much,
Thank
Dana.
you so
much
much.
appreciated. Dana Marahokon of JobStreet by Seek. In commemoration of Labor Day today, May 1st, President Bongbong Marcos paid tribute to Filipino workers, calling them the backbone of the nation. In a message released earlier today, the president said workers continue to drive the country forward despite economic challenges and shifting industries. He emphasized their key role in nation building across all sectors and circumstances, while vowing to expand job opportunities and strengthen labor protections. You're watching Money Talks. Coming up this Labor Day, we discuss how to maintain employees' mental well-being with Dr. Marshall Valencia, a premier value provider. And the United Nations projects that global inflation and hunger may rise if the Hormuz Strait remains blocked. Keep it here on One News. Welcome back to Money Talks. I'm Cathy Yang. Iran's Supreme Leader Mojtaba Khamenei has vowed to protect the country's nuclear and missile capabilities, drawing a hard line as a peace deal between the U.S. and Iran remains elusive. In a written statement, Khamenei says Iran regards its nuclear program as part of its national identity that wouldn't be traded away. The Supreme Leader says Americans only belong at the bottom of the Persian Gulf. He adds that the conflict has written a new chapter in the region's history. Trump reiterated on Thursday Iran is dying to make a deal, but claimed nobody knows for sure who leads the country. The 2-month-old conflict has kept the Strait of Hormuz shut, crippling energy supplies. The United Nations projects that global inflation will rise from 3.8 to 4.4% if the blockade persists. UN Secretary General Antonio Guterres adds that 45 million people may face extreme hunger as fertilizer deliveries will be impacted. The UN is already developing a framework to mitigate the impact of the crisis. As of 9 a.m. Philippine Standard Time, benchmark Brent crude trading at $111 per barrel, up nearly 1.3%. West Texas Intermediate sitting at $105 a barrel, up 0.6%. Brent hit more than $126 per barrel yesterday as traders remain concerned that the U.S. and Iran conflict may worsen. An industry source tells the Philippine Star there may be a potential price hike of 1 to 2 pesos per liter for diesel and 2 to 3 pesos per liter for gasoline. If realized, this marks the end of 3 straight weeks of diesel price cuts. As the Middle East conflict squeezes households and rattles business plans, the damage may show up first inside Philippine offices through stress, distraction, and eroding resilience. So how should companies respond before it hits the bottom line? Joining us for more is Dr. Marshall Valencia, Director for Research and Analytics of Premier Value Provider, Inc. He is also a consultant at the United Nations Office for Project Services and faculty member at the UP Psychology Department. It's good having you here, Dr. Marshall. Thank you so much for joining us.
Good morning. Thank you for having me.
All
Cathy.
right. So how do you think the employees are coping? It's been over 60 days since the Middle East conflict started. How are they doing and how are the employers coping as well?
Well, to begin with, even before the war, our data is showing that people are already very exhausted. Burnout levels are at 50%, meaning 1 in 2 of employees in the companies are actually at the critical levels of burnout. And when the war came, everything is compounding. So it's even getting worse. And the thing here is that most organizations seem to ignore the fact that that is building underneath because employees are actually still showing up. Engagement is quite high. So you might seem to think that everything is okay, but actually underneath, there's something there.
Where is that coming from, that they were already exhausted even before the Middle East crisis? I mean, are we seeing the scars of the pandemic here? And haven't employers learned about the pandemic and its after effects?
Interestingly, because before the pandemic, levels of burnout was around 25 to 30%. When pandemic came, it rose up to 60 to 80%, but that was expected. And then we were looking at the figures to be, start to go down after the pandemic, but it remained at 50%. So it's been there, maybe because of the changes in the structure of how we do things, a side effect probably of the pandemic. But more than that, maybe we have been ignoring certain aspects like this is mostly a structural issue more than a psychological issue because most employers would simply think that, it's something psychological, it's your own lookout. But actually, burnout is more of a design, a systems issue.
Could that have been designed by maybe the work from home arrangement? Because people just didn't know how to separate what was work
Exactly.
and what was for the family.
Yes.
And has that been taken to the workspace?
Exactly, that's part of it. We were trying to adjust with certain structures that are not matching the way we are dealing with things. And I guess it's a carryover. And we are operating as if things were,
Well, we're
like
at
the
least
previous.
operating on a 4-day work week, at least for the government agencies and maybe select private sector companies. I mean, is that helping out?
It should help.
And it's not?
For now, we're not seeing the effects there because it's more than just compressing the work week. There are other things that the employers have to take into consideration. Things like the basic work design, basic practices that are actually causing the friction and causing the unnecessary burden.
And that's exactly what we don't want happening because it starts to show up in the productivity of a certain workforce. Are we seeing the productivity loss bigger in some of the industries rather than the others? And if so, which ones are most highly affected 2 months on?
Well, if you look at the figures, let's say in terms of employee engagement, job satisfaction, employee net promoter score, the figures are actually very high. Our data is showing that engagement, for example, is hovering around 80 to 90%. So that's why most employers are saying, oh, everything is okay. But actually it's not, because if you look at the other metrics, especially the metrics related to the psychological state of the workers, it's telling us a totally different picture. So in short, employees are delivering. They're showing up for work. They are highly engaged on the surveys. But deep inside, they are suffering.
And the company will suffer soon because, as you say, it really shows up in the bottom line. So
Exactly.
what can employers do right now and in the immediate, let's say in the next 90 days, and what employees can do knowing that they are in a state where their mental health is compromised?
I recommend that they take on a more systems perspective in terms of, instead of treating this as simply a psychological issue. Because most interventions that companies are doing are psychological, capacitating their employees to deal with the stresses. But that's more than that. Most of the underlying pressures are actually because of the design of the work. So perhaps employers can start looking at that. And then the role of the managers are very crucial. So they have to be provided with the tools for them to do early check-ins with their employees, and find ways to reduce unnecessary friction. It comes up in everyday practices, the way people communicate, the way we spill over our work with our home responsibilities.
It helps to show a little bit of kindness at a time where
Exactly.
everybody's affected by higher
Yes.
oil prices.
Yeah.
Thank you so much, Dr. Marshall Valencia of Premier Value Provider, Inc. And checking in on the markets, U.S. futures are slightly rising after major indexes hit new records. The Dow, the S&P, and the Nasdaq are all up by 0.1%. Asian markets are up this Friday, tracking Wall Street's gains. Australia's ASX 200 rises 0.75%, and Japan's Nikkei 225 climbs 0.5%. South Korea's Kospi is closed today in observance of Labor Day. The S&P and the Nasdaq soared to new records this Thursday after strong earnings from Google parent Alphabet and heavy machinery giant Caterpillar. The S&P 500 climbed 1% and the Nasdaq is up 0.9%. Dow surged nearly 2%. For April, the S&P rose 10% and the Nasdaq 15%, closing their best month since 2020. Philippine markets are closed today, May 1st, in observance of Labor Day, a regular holiday. PSEI ended April in negative territory, falling yesterday by over 1.25%, as investors opted to stay cautious amid macroeconomic headwinds. The broader all-shares index shed 0.7%, with sectoral gauges all in the red. As for the Philippine peso, it gained some ground yesterday after dipping to a record low on Wednesday, settling at 61.485 to the dollar. The Energy Regulatory Commission has ordered the resumption of power spot market operations. Operations of the wholesale electricity spot market are resumed at 12:05 a.m. today. ERC Chairperson Francis Saturnino Juan says the Commission found the resumption the most suitable course of action at this juncture. He adds this will allow electricity prices to accurately mirror current market conditions while maintaining consumer protection safeguards. Before we go, a couple of movies to watch out for. Showing in September, Practical Magic 2 brings together Sandra Bullock and Nicole Kidman as the Owen sisters. It is a sequel to the 1998 film. They face a dark family curse in a world of magic, mystery, and mayhem.
I've waited such a long time for this.
She has.
You put the line in your coconut, you pick 'em both up, put the line in.
And in October, the horror thriller Clayface, starring Tom Rhys-Harris. The story follows a rising actor's descent into a revenge-driven monster, exploring identity, obsession, and the dark side of ambition. And this coming week on May 6th, the American martial arts fantasy Mortal Kombat 2. The film continues the story from the 2021 reboot, bringing back high-stakes battles and fan-favorite characters.
This is a war for the fate of your world. Finish him!
Me.
Looks like our weekend started. That is it for Money Talks. I'm Cathy Yang. Catch us again Monday, 9:30 a.m. Kapatid, we are One News, all sides, all the time. Have a great weekend ahead. I'll see you Monday.